Let's revisit Avalanche, ticker symbol AVAX, currently at $84.49. Avalanche is the 9th largest cryptocurrency with a market cap of 20.7 billion. The total value locked on Avalanche is 10.8 billion. So it's the 4th largest layer 1 competitor or smart contract platform. And so it's in direct competition with Ethereum and of course other fast Layer 1 platforms, Terra Luna, the Binance Smart Chain, Phantom, Solana, Tron, Polygon. Polygon isn't necessarily a Layer 1 competitor. It's technically a Layer 2 to Ethereum. It's a scaling solution to Ethereum. But in the end, when you use Polygon, it's pretty much like a separate blockchain. You have to bridge your money over. You can't really use the Ethereum decentralized applications without modification. But this is what the general trend is. So Avalanche is part of the trend of taking market share from Ethereum. This is a breakup of how much total value locked is there on Ethereum versus other layer 1s. And we can see here in purple, Ethereum is losing more and more market share and AVAX is taking away market share. Now, what's important to note here is that the competition sometimes is very direct and sometimes not as direct. So for example, Solana is not EVM compatible. Neither is Terra Luna. So you can't just port over your Ethereum decentralized applications. You can't use the exact same code and just deploy it, say, on Terra Luna or on Solana. You have to rewrite the applications. It's a different programming language. That's different to, for example, Ethereum and the Binance Smart Chain or Ethereum and Avalanche. You can just copy paste your Solidity smart contracts and simply reuse all of that code. You can directly compete and then not worry so much about the high gas fees, right? The Ethereum gas fees, they are high enough that a lot of transactions are not profitable anymore, especially DeFi transactions where you just might get, say, 10% per annum or so on your investment. So how is Avalanche's total value locked specifically developing? That's this chart over here. So this is now AVAX only. And since the incentive program, that TVL has gone up a lot. Now, it's important to differentiate here between the US dollar total value locked and the total value locked in AVAX tokens, because a lot of the capital locked up on the Avalanche blockchain, it is somewhat correlated to the token. So when we actually look at the total value locked in AVAX tokens, we can rather see how is money getting in and out of the system. So how are people bridging tokens to and from Avalanche? And by looking at this, we can see it's pretty much stable. So money is not really directly flowing out. The slight downtrend that we saw here in US dollar terms is simply due to the overall crypto market fluctuating quite a bit. So we got this rush, and since then we are pretty much moving sideways. Now, what are the decentralized apps used on Avalanche? It's obviously Aave, the borrowing and lending platform, and the decentralized exchange TraderJoe, that's the largest one. And then we've got Curve, which is large on a lot of different blockchains. Now, when we go to TraderJoe itself, it's always interesting to see where the action is currently happening, what's actually being traded. And very often we see here interesting projects that we might want to jump on. And there seems to be some kind of a push here for a new token called Blood. Now, I don't know what this is relating to. If you do, feel free to comment this down below. This seems to be the newest big thing here on Avalanche. Of course, we've got the AVAX token and our stable coins, and we've got Thor Nodes, which has been around for quite a while as well. It's kind of similar to Strongblock. And then we've got gaming tokens. This here is a rebase token. So there seems to be something new coming up. Blood, it's not even tracked here yet on DeFi Llama. Now, what about the relative valuation? So we can always look at the US dollar valuation of a cryptocurrency, right? But the problem is always the correlation. So when we look here at AVAX and we look at the price top and we compare this, for example, to Ethereum, right? We have very similar timings. When AVAX is high, Ethereum and Bitcoin is high. When AVAX is low, Ethereum is also very low. And so there's simply a lot of correlation. So you want to look at the relative performance. How is AVAX doing, relatively speaking? And this is now AVAX versus Ethereum. So we do have quite a bit of volatility here. When you don't time this right, you can potentially be at a temporary loss of 85%. Now, some of that positive momentum seems to have faded to a certain degree. We are now fighting with this all-time high. The question is really, when we break out, will we really massively outperform again, or will we struggle to really gain? Currently, the market dominance of Avalanche is 1.1%. So Ethereum is around 20 times larger. It's unlikely that AVAX will flip Ethereum anytime soon. So a 20x or so won't happen that quickly. But I do think over time, Ethereum is likely going to lose more and more market share. I avoid Ethereum where I can. There's pretty much the exact same applications on the competitors. And right now, there doesn't seem to be a consolidation among those competitors. So maybe it, at least right now, when you don't have a strong opinion on this, have a basket of those competitors. If Ethereum is losing, you might want to go short in Ethereum. So you want to bet on falling prices of Ethereum and then bet on rising prices for those layer 1 competitors if you believe that this trend here will continue, right? This is just total value locked, but it's very likely that when the total value locked, when the money flows out of Ethereum and to the competitors, that also the underlying token gains versus Ethereum. Now, in case you don't know this yet, there's a nice website called Messari.io. And the issue with Avalanche is the inflation rate. So there's a lot of new AVAX entering the market, which might long-term depress the price, right? The larger the Avalanche market cap, the more money needs to flow in simply just to keep the price stable. So this additional supply is a risk. And so the question is, will this value transfer from Ethereum happen quickly enough to offset that additional inflation? Now here is Dune Analytics, dune.xyz with the bridge away dashboard. Simply Google for that. Here you can find the bridge statistics for various layer 1 competitors and for Avalanche. This is what we are looking at when we focus on the daily unique depositors, so the number of wallets. So this is basically a measure of retail activity to a certain degree, right? And of course, at the beginning, there was a huge rush, the incentive program. And since then, we are pretty much at a stable rate here, around 400 or so unique depositors per day. And this is the total value locked. So this is now not the number of people, but the number of dollars. And so what should we do now? Should we buy AVAX? It's always hard to answer this, especially in the current environment, right? If you're wondering how I currently see the momentum around Bitcoin and Ethereum, feel free to check out the premium membership. It's down here, thebitcoinstrategy.com. But given the current comparatively high valuation of AVAX, here's a tip what you can do. You can go to a platform such as a Banky. And what you can do here is you can borrow different assets. So you deposit certain collateral, whatever you want to hold long term, if that's Ethereum, if that's DAI, whatever it is. You deposit something, you get a little bit of a yield on this, and then you can borrow against this. So let's say you want to be risk off, or let's say you want to hold Bitcoin over the long term. It's somewhat correlated, so maybe you also protect yourself a little bit from the fluctuations of whatever you borrow. You deposit Bitcoin, get 1.6% yield on this, not much, and then you borrow, for example, AVAX against this. This would now be a situation where you take on a loan in AVAX, you pay net 4% per annum for that, right? You get a little bit less for your collateral than what you pay for your loan. You pay 4% per annum, and that loan is denominated in AVAX. In other words, you take AVAX, you pay back AVAX. If AVAX goes down in price, that's great because you can potentially buy that AVAX cheaply again and pay back that loan cheaply, right? So that's one strategy, but let's think about the following. Let's say we are not certain what's going to happen. We want to be somewhat neutral to the market. What we can do is we can deposit our Bitcoin, we then borrow AVAX tokens, and then we go to a platform such as beefy.finance and we deposit that in a liquidity pool that has AVAX in it. So for example, something like this, my AVAX. My is a stablecoin, UST is a stablecoin, whatever you want to use. So let's just search for the AVAX pools. And what Beefy Finance is doing, it's auto-compounding returns on liquidity pools. So when you go to Trader Joe, there's a liquidity pool. You swap in and out of a certain token. During the swapping, fees occur, and the fees, they go to the liquidity pool providers. What Beefy Finance is doing is it takes the token that the DEX, that the decentralized exchange is giving out, it takes that token and it reinvests this back into the liquidity pool regularly. It auto-compounds. And so the APYs that we see over here are typically higher than the APYs we can see directly under farm here on the decentralized exchange, because these are not auto-compounded. It takes some time to load, but there we go. So here, let's look at this. AVAX UST, farm, APR 34%, AVAX UST, APY 52%. So it's simply by reinvesting the token regularly. So what you could do now is you could borrow these AVAX tokens, right? You deposit something, you borrow AVAX tokens, you've got a loan in AVAX tokens, and then you deposit some more stable coins, 50-50 split, right? Some more stable coins, say UST, and then your borrowed AVAX tokens, you get 67% on this. And then when it comes to liquidating that position, when you want to close this again, you sell everything and you pay back your AVAX loan that you only pay 5% on. So this is called delta neutral liquidity farming. There is a bit of a risk here, right? When AVAX moves too much, you've got something called impermanent loss. If you want to learn more about this, again, simply search for this within YouTube or maybe on this channel, on the premium membership, wherever you want to get this information. So it's not completely risk-free, but the risk versus reward, in my opinion, of doing such a move is pretty good. And it does get you away from a lot of that price risk, especially in this current market environment where we don't really know, is AVAX still a good buy at these comparatively elevated prices? If you found this video useful, feel free to subscribe. I publish videos regularly. There's also a Telegram channel, 2 in fact, that you can join. Make sure you don't get scammed, right? Because sometimes people, they impersonate me, they try to sell you something on Telegram. I never message people directly, but our community is quite nice. It's 1,600 people. So feel free to search for Bitcoin strategy channel within the Telegram app. I'll also pop up a link now to the premium membership video with more details. Feel free to check that out. Thanks for watching and see you next time. Bye-bye.